In this next section, I'm just going to go right into the QuickBooks Intermediate level training, is managing your business's finances like a pro. In this, we're going to learn how to use the modules for revenue and expenses in QuickBooks on the cash and accrual methods and identify the difference between the methods and issues that could result from not properly recording the correct method. You're going to learn how to navigate the Customer Center and Vendor Center of QuickBooks to locate customer and vendor information, and learn how to prepare a bank reconciliation and identify the components of a bank reconciliation. So we're going to Chapter 1, it's going to be cash versus accrual. We're going to get into money sales, then Customer Center, and money out expenses, then the Vendor Center, then the bank account reconciliation, and then journal entries. So for cash versus accrual accounting, you're going to learn how to record a cash receipt on the cash basis, learn how to prepare an invoice on the accrual basis, learn how to receive a payment against an invoice, learn how to use the module for revenue in QuickBooks on the cash and accrual methods, and identify the difference between the methods and issues that could result from not properly recording the correct method. You're going to learn how to properly deposit receipts and payments into the bank register. You're going to learn how to navigate the Customer Center of QuickBooks to locate customer information, including bills, payments, and receipts. And you're going to learn how to prepare a bank reconciliation and identify the key components of a bank reconciliation. For cash versus accrual accounting, you want to define the accrual method of accounting and the purpose, define the cash method of account and the purpose, identify the modules in QuickBooks utilized for recording transactions on the accrual basis and the cash basis, and you want to understand the complications of not utilizing the cash and accrual modules correctly. Accrual accounting, expenses and revenues are matched, providing a company with a better idea of how much it's spending to operate each month and how much profit it's making. Expenses are recorded in the month incurred, even if the cash isn't paid out until the next month. Revenues are recorded in the month the project is complete or the product is shipped, even if the company hasn't yet received the cash from the customer. And the difference is with the cash accounting is that their expenses and revenues aren't carefully matched on a month-to-month basis. Expenses aren't recognized until the money is actually paid out, even if the expenses are incurred in previous months. And revenues earned in previous months aren't recognized until the cash is actually received. However, cash basis accounting excels in tracking the actual cash available. So back to our QuickBooks software, we're going to go click on Customers, and then we're going to click on plus sign and select Invoice. And then drop this down, there's going to be an invoice, and we're going to fill it out. So you can select a customer here. We don't have anybody yet. You can put their email in here, and you select the term. Is it due on receipt? It means it's due when they get it, or is it not due for another 30 days? Select the date is when the date you send it, or when the invoice, and then due date is when the money is actually due. And then you record the item and quantity right here in your product and service, what it's called, the description, what it is. And then you can put a message displaying the invoice. You can put a memo saying, this is just for you, and then you can put an attachment if there's a file or whatever. So for the example, we're going to enter Blackwell Edward as a customer. Let's see. For email, we're going to put ed at blackwell.com, and we're going to select details and enter an address and save for him. So let's enter in 100 High Street in Glassboro, New Jersey. We're going to enter in 1/15/14 as the invoice date, and invoice number we're going to ignore for now, and sales terms we're going to say net 30 days, and consulting fee. Record a subscription. Amount is 1. And then we hit save. And then you're just going to click invoice. You just put here is your invoice. And then hit save and send, or in this case, well, I'll say just hit save. Okay, then from this screen, we're going to get out of here. And we're going to go to receive payment. And in this one, we're going to enter Blackwell. And we're going to go payment date. As January 17th. Deposit account. Account is beneficial bank. So amount paid is going to be $100 and say apply to invoice. Okay, see. Okay. You can also add a reference number, and we could have written that memo and add an attachment. Okay, so then let's go and make a sales receipt. So this is when we sell something and we're getting money for it, obviously. So we got a sales receipt. Customer address, deposit to, payment method, what the item is for, the location. So we're going to enter in a new customer. We'll name her Natalie Chapman. Let's see if you can link it with your Gmail account. We're going to add her email to be natalie@chapman.com. Transaction date is going to be on 10/14. This is payment method. She's going to pay with a check. Reference number and bank deposit to undeposited funds. Item training is going to be the training fee is going to be the service. Description is going to be item. Since we don't have that, remember we clicked it, so let's go back and edit that. That's where we got confused. So we're going to go to Sunshine Nursery, company settings, sales, track, quantity and price, quantity on hand. Let's see. Save it. Go back. We're going to look up. There's the invoice. Let's click back on this one. And let's click on this to open it back up. So product service is going to be training fee. And there's total. And we're going to add this, and we're going to say it's $30. Save and close. Okay, so entering a customer invoice and then recording the customer payment in the bank register by deposit or sales receipt instead of utilizing the receipt payment window will result in doubling revenue. All income needs to be recorded at gross value. Any expenses associated with the sales, such as PayPal fees, need to be recorded separately in the expense section of the profit and loss. Failure to record these transactions properly will affect net income and your tax liability. So let's do a deposit. So let's get out of this and click on new, and we're going to go bank deposit. We're going to select bank account, go here, date, select existing payments. These are the payments that we have to deposit. So select a bank account. We're going to choose beneficial bank. Customer, Natalie Chapman, select her. Consulting fees is going to be call this account. Consulting fees. Reference numbers in. Save. Reference number is 1423. It's $50. Money that is deposited in your bank account can be entered in QuickBooks as a received payment against an invoice, making a deposit, and a bank transfer. Payments against an invoice and accounts receivable must be entered by received payment. Deposits received on a cash basis must be entered by a cash receipt or by making a deposit. Transfers from one bank account to another must be entered using the transfer function. Errors in recording can result in overstating revenue and affecting the net income or the profit and loss. So for money transfers, we're going to do select the transfer. Out of this. Transfer. Money transfers. Money being transferred from one business account to another. And in this, like the beneficial savings bank. So enter text from beneficial bank. And we're going to transfer it to, let's do inventory asset, even though this is beneficial bank. Or you know, I guess we can do it beneficial bank. Transfer amount. $5,000. Date is 1/30 at the end of the month. And hit save in the following errors. We can't select the transfer we're currently working on, so we're going to do inventory asset. Alright, transfer saved. And then we're going to get out of this, and we're going to click on vendors. And this is Customer Center, where it's the central place where we can look up customer information, create new customers, and find customer transactions and balances. And that's actually right here. Sorry, this one. So we see we have Edward Blackwell, Natalie Chapman. Customer. So to add a customer, you click New Customer, and the pop-up window allows us to enter all important information regarding our customer, including the display name and how you prefer the name you print on the invoices. As there's data entry fields are available to store account information if we want, which would be in the that would be under additional information. So for this one, we're going to do, I guess we'll just make up a new guy. So we'll make up, notes, and you just hit save. And it says, and here's our customers right here. Okay, so then let's go to enter a bill. So click create a new. Let's go to bill. Not Bill Clinton, pick a bill. Not a bill. So you're going to select the vendor. So for this one, let's add a new vendor. Let's say this vendor is this Sony Water. It's kind of the same as the other invoices. It's very similar. It's a bill date, bill due on. So the term's going to be 30 days. The bill date is 12/17. 13, the due date. So it's 30 days past. So it would be 30. So it's 17 plus 30 would be the 30, 27. So it's 1 month. So it's 1/17. Let's call it that. I don't know how many days in December. Mailing address would be Water Park, New Jersey. That's bill number. Put in number 201355252. Professional. It's going to go in the expense as professional services. We don't have any expense right here. We can do it right here. Professional fees. And this one we're just going to select consulting fees. Of $2,000. And we can put memo. We can put supposed to be professional fees, and then hit save. And then for paying bill, it says the following error has occurred. You must select the vendor. I thought we did the Sony Water. Oh, that's saved. So let's save it. Okay, good, it's saved. So then, let's pay a bill. So we're going to get out of that. New. We're going to go pay bills. And we're going to select the bank account. It's going to be beneficial. Beneficial bank. Bank. Save. This is a different name, so we'll call it beneficial. Save. Select to show all bills. We don't have to do that, so we're going to check off. Payment date we're going to do is 12. Let's type it in. 12/23/13. Start checking number is 1. That's fine as the first one. Print later. And you can do save and print, or you can search for the ones, the bills. And this one. So then for the other ones, we can write a check. So let's go to check. WB Mason, we just bought some supplies from him. We can pay him from the beneficial bank. The mailing address can be in Philly. And the payment date can be 12/24. Check number is going to be when enter expenses, all the supplies. So the account. Hardware supplies. Office supplies. Amount of good. senders. So we get out of this. Vendors. In the vendor sender, this is a central place where you can look up our vendor information, create new vendors, and find new vendor transactions and balances. There's our two vendors right now, Design Order and W. Mason. Oh, this wasn't. Okay, just checking. To add a vendor, just click Add New Vendor, and it's just like the customer one. The pop-up window allows us to enter all the important and necessary information regarding our vendors, including the display name and account numbers. And then let's get rid of that. And to enter additional information, additional vendor information, just on the right side, it's all together. If for subtractor vendors, if we have vendors that are considering subtracting vendor and must be issued 1099, we would enter the tax ID number for 1099 and click off the box. Track payments for 1099. Boom, boom. Account, click No, click make sure I get out of there, home, click in here, go to reconcile. Beneficial, and click reconcile now. And then when reconciling your bank account, there are several items to pay attention to before ending the reconciliation. Review all outstanding checks to ensure they are actual checks that are expected to clear, and review all outstanding deposits to ensure that deposits are deposits in transit. And then okay, statement ending. Ending balance, what you think it is, and hit OK. Alright, so let's go to, that's pretty much it, and you're set to go. Sorry for the interruptions, and good luck in managing your QuickBooks portfolio.